Welcome back, everybody. I am joined by Kevin. Give us a quick holler if you can hear us both all right. We're going to be getting into some earnings reports real soon. I'm setting them up as we speak. CDNS is going to be one to watch. Toll. So
Yeah,
CDNS, first little push up there. I'm going to get earnings reports up and open. So we are going to have who's coming up first. HL is also on the list. That's going to be Hecla Mining. They do a lot of silver mining. So interesting there. Interesting implications for the small cap silver miners. Amazon looking kind of constructive after hours. Wonder what that's about. So let me go on to the calendar.
let me know, guys, if you can hear me in chat. We were having trouble in the background. We can't. Steve's unable to hear me for some reason. So, Tack, let us know if you can hear me on your end. But yeah, couple earnings plays. We already got a couple moving right now. DVN, some quantum plays, AI.
All right, guys.
Of course, PANW.
Kev, I hope I'm not talking over you. It seems like you're muted on the other people's end. Talk. If you can get a confirmation, that would be excellent. So at the risk of talking you over you, I'm gonna hold it down real quick until we figure that out. So let me get these earnings reports going for you. So Palo Alto Networks is going to be 10 minutes after the bell. 10 minutes after the bell there. It's going to be one of the first. CDNS. All right, that's got to be results. We're going to check in on those in just a minute. We've got a surge to 300 plus. I'm going to go to an hourly to zoom out for y'all just so we can get our bearings here on CDNS. Levels are going to be, well, 300 is the one that I had marked. If we're through there, then I think that we can progress pretty nicely to this mitigation area at 320. So 300 to 320, that's the area that I was looking for. The initial move was up. Now we're seeing a little bit of a head bonk. We're going to get numbers for you in just a second.
This will be fun.
Shoot, Kevin's fine. I will stop talking over you. I'm so sorry,
No,
Kevin.
you're fine. No, you're good. This will be
What the heck's
fun.
going on with me?
This will be fun. Yeah, 320. Yeah, CDNS 320 is that line, guys. Whoa. All right, let's take a look at. And it just got slammed from 309 back to 298. Earnings per share 199 per share versus the estimate of 191. So they did beat earnings expectations.
Kev, I'm going to hop in and out of the studio, see if that fixes it. Very strange. Okay. Sorry about that.
All right. Yeah, so it looks like with CDNS, it has a history of beating estimates, right? So CDNS has a history of it. Backlog remains strong, and design automation tools are still critical amid AI hardware demand. But in this space, guys, like the guidance is what matters a whole lot.
Sorry, it's working. It's working. We're good now. I'm so sorry.
Okay, you're good. I was like, this is going to be fun. This is going to be fun. What happened? Just some setting, right?
Yeah. Since the morning stream, apparently it reset my audio output. Okay. The classic. Apologies there. That's Bush League.
Oh, okay.
So we have the cadence numbers. I'll have those for you in just a sec, but it looks like it's going to be a beat. Toll pushing up nicely as well. I think we're still waiting on those numbers. So hey Kev, how you doing, brother?
Oh yeah. Now that we can talk to each other, yeah. Nice. How was your day today? It looked like, from chat, by the way, and I think the screen share. If you got those earnings, we can get those back up. Yeah. It looked like from the screen share earlier, everybody was mostly good and green today. It was 20% were red, 80% were either flat or green. So good work in chat, everybody. How was your day, Mr. Steve?
I'm in the 80% today, and
yes.
Every day I am. I count my blessings. So today for me was pretty straightforward. My signal was long out of the gates for a small scalp to the 0 gamma. So we just took about 250 in SPY premiums there, and then caught the fade down for about $4.50 on that. So I was done within the first half hour. That's always an ideal day for me. I get to kind of hang out and get my bearings. Yes. What were you trading?
It was real light. I mean, there were a couple. Joe had a great one, PLYX. That was a decent play, Joe, and Crow hit that one. I hit ATOM today was a big one. ATOM, small cap land. That was a big one. So ended up getting a couple trades on that. Good volatility there from earnings. But outside of that, hey, we got a little small cap earnings play, Quantum QMCO, that they haven't Did they just release? Yep, they just released earnings. QMCO, quantum name. Not a lot of volatility yet on this name, but I know in the quantum space, especially QMCO, from the research here is that they're almost expected to miss. They miss so
Yeah.
often, right? So
Price for
yeah,
destruction.
yeah. So a lot of it's just determined more on the guidance, and that's what gets more so vexed into the pricing versus because well, what's a good thing about how you can determine if a company's healthy or not, Steve, is like how are they are they reinvesting into their company?
Right.
Are CEOs, are they dumping their shares? And so these are filings we certainly look for. But yeah, if we looking at the earnings right now, QMCO revenue exceeded. Yeah, exceeded preliminary results, higher than expected revenue.
We're we're seeing a little shake and bake on PANW. I don't think the earnings are out for another 4 minutes. We're keeping an eye. That's my top watch here. I don't want to miss that guy. As I try to load in my Twitter feed here. All right, we're doing it on the phone.
Yeah, PANW. Oh, very guidance. I'm seeing it. Yeah, it's coming out right now.
Oh yeah.
Post Q, $1.03 per share, estimated 94 cents.
There it is. Okay, so a surprise 9.6 beat looks like there. All right, we'll see how price reacts. We're gonna need to beat those expectations. Like Talk was saying, it's not necessarily just about how the stock is doing in a vacuum, but how it's doing in comparison to expectations. So CDNS, we thought it was going to break that 307 or 300 level. It tagged it now as testing back here at 287. So I'm gonna double check on CDNS. Looks like that was a beat. Trying to get the exact numbers.
So,
mm-hmm.
Yeah, just curious with the in the kind of the software security, cybersecurity space. Even with beating, so some of these earning beats still don't are not pushing these things higher. They're still seeing selling pressure just based off of, I guess, similarly to the other tickers, like the overall like guidance. Like, what are, I guess, the AI concern, right? Like we've seen software and how it's been taking a hit lately. What are your thoughts on all that?
Well, I think it's interesting. I think we're in a period where babies are still kind of getting thrown out with the bathwater here. I think the market has accepted this next kind of cycle of high capex AI kind of expenditure, and I think it's more about which companies are actually going to leverage this into the most immediate results. Because we're seeing a lot of these companies that we thought were AI plays just getting absolutely dumpstered. And I think that this is the moat of this whole. I mean, I know I keep saying OpenClaw, but it's pretty wild what people are building, and it's pretty wild what moats are kind of dissolving before our eyes. So names like BBAI or SoundHound, I'm not sure these are going to be around in a few years at this rate. They're going to have to pivot fast, at the very least.
Yeah, so that's something you're focused on with these, right? Is like how are they pivoting? Not necessarily, the investors are not necessarily looking so much into, okay, we beat expectations on quarterly expectations, but more so how are we taking this new AI infrastructure and like you're saying, pivoting with that, evolving as companies. Otherwise, some of these companies may not be here.
Yeah,
Or they may be here, but they may be a small cap ticker.
yeah,
Or they may be on OTC. Yeah.
Exactly. A lot of names that might not be considered. They might be names I was trading for years. Now they might be into your wheelhouse now.
Yeah, exactly.
So it's funny when we pass the baton like that. So I'm gonna start digging for some kind of commentary on some of these guys. I'm not seeing anything that's like really jumping out at me for cadence. I'm waiting on Toll as well here. This is going to be not till and we have another 20 minutes on that. So that's going to set some nice standards for the home builders. What do you have any thoughts on those guys? No, I'm just kind of blindsiding you there because I don't really. So I'm trying to pick somebody else's brain. They look strong, but it's at like this testing point for me.
The home. So what ticker?
So XHB is going to be the index. To me, it looks like it's coiling up for a big move, but I'm kind of trying to square the circle. It's like, why am I bullish on home builders right now? Well, maybe Toll can help kind of paint that picture for me.
Yeah, I mean, trying relative risk to return basis, won't fix housing. At least where XHB sits right now, and you see this so often, we're real close to that 126 52-week high. I mean, just technically based, oftentimes we're going to be testing that level, especially with these higher lows we've been putting in. Very oftentimes that's the case. We saw it with so many tickers today. But as far as like swing trade ideas, I'm with you on that. Would be more focused in on just the intraday predictable pieces of the moves.
Just a quick update on PANW here. We have been consolidating for maybe 5 minutes, pushing down. We did just sweep the previous range low. So I'm kind of watching to see in this 157 to 159, 160, basically under that 160 handle, what we do. There's a chance that we can bottom out around there. It's not like the most aggressive sell on the 1 minute. So keeping an eye just on the potentiality for maybe earnings to kind of, or the call to kind of come in and save the day there. So QMCO starting to move a little bit there. Not even a little bit. That's a $6 to $7 move.
Wow. I was thinking about just throwing a little piece on that because this ticker was at near all, at lows. And honestly, for QMCO, any news at all in general was going to look like it was going to be fairly positive because investors expected this ticker to already to be losing money on the quarter. So as long as they are taking the necessary steps, for their in relation to their guidance, they were gonna get a decent pop. So again, that they were still negative, Steve. Adjusted earnings per share. So they lost 36 cents. But they beat the 45 cents. You lose money and you get this reaction to it. 75 million beat 69 million estimate.
That's so funny. It makes me think of that old saying, like, you don't have to run faster than the bear. You just have to run faster than your friend. Like, you don't have to beat objective good metrics. You just have to beat these low expectations. All we're trying to do here is not get eaten by the bear on earnings, and so it seems like they're turning that corner. Meanwhile, Cadence, I'm just sitting here watching this thing hanging out at 290. For me, this is kind of the story here is like, so they're like AI driven design tools, right? So it's like, can we justify the premium, the valuation, despite a little bit of expected growth deceleration? That's kind of, it seems like that's what we're parsing here. And it doesn't seem like a bad company by any means. I think it's high quality. Again, tourist in the space, but I know a few people who are invested in this really long term. And it seems like it's just in this wait and see mode. Maybe they're waiting on the guide, which would make sense because I think that is kind of what it comes down to. So, the earnings call. Just for a little more context there. PANW just hammering. I don't like this. Don't like how weak it is there. So keep an eye.
So much of trading is just off of your expectations. I think this is related to earnings and some of these moves we're seeing. So, like, for example, we see tickers so often that like the cybersecurity, we're seeing PANW sell off after good earnings, but then you see QMCO on bad earnings and they're at highs right now. So oftentimes, QMCO
still pushing. That's beautiful. I was worried because the spread widened into that 7, so you could think, okay, maybe that's a big shelf, and there's just going to be an imbalance of sellers up there. But no, we're powered through. So if you're a bull on this one, I'm thinking. I mean, I hate to. It's like this is high level analysis here. We broke 7, maybe 8. That's kind of where my head's at.
Well, that's what I just mapped to. Looking left, eight's looking like a good level there, and then beyond that, of course, we're likely to push to 10. But for so where I was going with that is essentially with the expectations that what are they? They're a visual, and this goes deep to even the psychological, like you and Tack were discussing earlier on your Power Hour stream. With expectations, that is a mental representation of what Steve and Kevin thinks is going to happen. And so if you're already going into knowing QMCO is bleeding, but they're not bleeding as much, it's still like that. The representation, the mental representation is there, and that's honestly like that's the metric oftentimes that we can utilize. So that we need, the key metrics here will be revenue growth, cost control, some of the things I'm looking at. But yeah, the data storage, AI related infrastructure, all of that's been so hot here lately, anyways. And with a ticker like this at lows, not a surprising move right there. PANW still
just
hitting some
driving
lows.
down there. Oh my goodness. I think 150. I think 150 just needs to kind of prove itself at this point, and that still is just the bottom of this little daily range, which is starting to look like it was indeed another bear flag. So we were talking about this a little bit on my stream that, you had some other points where you thought that maybe this was turning a corner, putting in a higher low. But so far, you've been foiled again, and just the sell continues. And when I look really long term, let's pull up a monthly really quick. I'm just like, heck, this could be really gnarly still. If you kind of think about, okay, we had this big washout. Okay, the party's over. Well, it could just be a mean reversion move back up here. And you know what? I'm going to flip this around so we get the drawings on the other side, because I want to show you this 6-2 fib. And yeah, bada bing, bada boom. So in this immediate flush out, it retraced to the optimal place to resell it, and now it's reselling. So for me, I think that this needs a higher time frame long-term bottom. Personally, I'm thinking this needs to go down maybe 128. Sure hope not lower, maybe 100, but that's kind of the zone I think it might need to transact if it can't turn.
Yeah.
Because otherwise, I mean, we have 3 more months of winter here for these guys, until there's a eventually, just hammering. So cadence, though, this one I do like the little bit of distinguishing that's happening, amongst the software names. So this one, it's to me, this looks like it's cooking under this 300 handle, and maybe tomorrow, maybe on the guide or on the call, it's going to reclaim. One more I don't think we mentioned yet, DVN, Devon Energy.
Devon Energy.
Yeah, Devon Energy reported about 10 minutes ago. Not a big result. A little push down, a little push up. The bid is basically right at the close. The spread's a little wider, about 1 to 2% down, but still holding the range. I think a lot of these energy names, they kind of need to just chill and trade sideways a little bit and flag out. Has that spilled over into the small cap scene? Have like all
even like today, there's been one. There's Soon was one of them. SUNE. Like these, there's been some energy plays. Yeah, those can be tricky to trade in small caps because there is some actual reputability behind them, not just junk, right? So, but yeah, I agree with that analysis for sure. DVN is what, if you look at the 52-week highs, she is sitting right around the highs there.
Yeah, this is one of those charts that I've been watching for years and years. Just, you go through the charts late at night and you're like, I wonder when it'll be energy's turn. I've been watching these charts trade sideways since I've started trading, just about,
Right. Well, break down your nightly routine for me. So you're flipping through. Is this like right before you go to bed, Steve? Just is like, I'm going to flip through all.
Yeah. So I'm weird, Kev. I don't know what's up with my brain. It's
no, that's not.
Somehow it's relaxing to me to go through charts. So my nightly routine, I'll get some tea, I'll get a little snack, I'll maybe have a beer, maybe just unwind a little bit, get my head. Yeah, just get in the zone, and then I'm just going through mad charts. I have like a master list of like it's up to probably like 700 stocks of just things that I've traded in the past year.
Oh man,
I know, but
all the levels are mapped out.
Kind of. So then I just scroll real fast, 1 to 5 seconds per chart. And then there'll be like 10 things to 50 things that spark interest, probably 5 to 10 that spark joy. Those go in their own playlists. And those are the focus lists, So that's kind of my routine. It's a ritual at this point. And then I will kind of, I do the real quick look every night, but realistically I do the full look about once a week, and always a real in-depth once a month. Because I just want to kind of get my bearings and see what's been moving without me watching, where these undercurrents are kind of pulling liquidity and, funds from one area to the market to the other. Oh, QMCO. A little bit of a headbutt there off the 50%. Wow. So a little bit of a mitigation up to the 750-ish area. Seeing a little pullback, but, Kev, you're no stranger to this short pressure, right? So this probably has high short interest, and they're probably jamming it back down here from a big push up, right?
Oh, okay, yeah. Well, what we say is the faster the move, the weaker the trend's going to be. So,
Oh,
yeah, longs take the stairs up, shorts take the
mhm.
elevator down. You've heard that
Yeah,
before.
love
Uh,
that.
yeah, that's why typically I like the shorts because it's more reactionary and it is quicker.
Yeah.
But on the swing time frame, which on the swing time frame, of course, like market wins, right? I mean,
Yeah. Mhm.
historically, like, it's just a time game
Yeah.
as far as that goes. So they say the only ones that get hurt on those roller coasters are the ones that jump off. So on
Ain't that the truth?
if you widen out your time frame, yeah, market's going to win. Go long bullish there, but intraday, yeah, certainly more like the elevator down. QMCO just is that it's had that little upper wick pulling back down off of that a little bit. Man, PANW, still kind of
And
selling pressure, and then cadence. Like you mentioned, is I think right there the previous close is a technical level to be monitoring on cadence, but she's really kind of starting to go sideways a little bit. Stair
mhm.
steppy. The stair steppy is the sign of health. So it's the previous close is one of my favorite indicators,
Yeah,
Steve, and 299.46 is that. So
nice.
that's an important level, whether green or red.
299.46. I got 64 there. That's close enough for government work. But yeah, and you can see just Kevin, you're like dead on where these levels. If you just have them on your screen, you're at such an advantage because look, it shot above, but it it like kind of held the line right there. That's where the sell started. That's where this next bull push is starting to stall. So it's dead on to the penny. These are like I always think of it like it's like if you're coding a bot, it's like if this then this, if this then this. So if we test this and break above, then we can go check the next level. But so far, this level is not past the vibe check, so to speak. But definitely
Yeah.
coiling under it. So we'll see how that progresses. I think the real kind of key question for Cadence is can AI drive these bookings and reaccelerate growth? And I think that we'll have to kind of I will have to defer to the experts as they listen to the earnings call. But for a
Oh,
charting perspective, looking
well,
pretty
I'm
decent.
here.
Mhm.
You're deferring to the experts, Steve? No, I'm just kidding.
I
No,
mean,
not
it
me.
ain't me.
Not me.
I don't know.
It
I'm
ain't
deferring
me.
to somebody. Yeah, I hope there is.
I'm gonna defer your deferral.
Exactly. We can go back and forth a few times. Well, for me, it would be hubris to assume that I know more about these companies when I'm just glancing over them at a week and reviewing at a very bird's eye view their fundamentals. When it's people's whole job to analyze these, and
Yeah,
I got to imagine, like, if you're a software analyst, you need the work right now. So I'll refer to you. This is your time to,
man.
even if it doesn't feel like it, it's their time to shine, I guess. So,
Yeah,
man,
man.
when they wave the white
Man.
flag, maybe I'll step in. But
So, Tyler, ANET, that's analyst downgrade is what it appears. Just
ooh,
adjust price target. Yeah, 173 to 151.
was that after earnings too? So they're just yeehawing the. It looked like that was maybe earnings a few days ago. Either way, this is a chart that wanted to go and now it just got bopped. ANET was putting in a nice kind of upward pennant that looked to me like it wanted to kind of break out as of the close.
Mm-hmm.
Kind of bopped there. So now back in the holding pattern. As my friend would say, back in the casket. Just go back. Take a dirt nap. We'll revisit this in a little bit, but
Back in the casket. That's funny.
no, do not pass go. Do not collect $200.
Ain't that
So
the truth? So right now, yes, CDNS. I mean, that previous close is rejecting, but the low volatility. We just got to keep it on watch. Right now, it's still, as long as it's holding its close, fairly bullish here.
yeah, it's just kind of hanging out. I think we just let it rest. One name that's really interesting that's reporting. I didn't want to mention it till we got through the first wave there. This one's reporting in 5 minutes EQT. So this is going to be energy name specifically. They have a lot of natural gas exposure. So this is an interesting area because a lot of these equities have been trading sideways because they have natural gas exposure, which has been getting bodied. But energy has been doing great. So if they're trading sideways while one of their key holdings is just getting wiped out and now is potentially turning a corner, this might be enough to kind of guide these equities up and out and try to match some of the moves that the underlyings have been kind of trying to make, I think. So EQT, especially on a monthly, this thing's looking real pretty to me. I mean,
yeah, taking a look.
wow.
I mean, it's been holding I see the 50 level real well. Apparently, it's the largest natural gas producer in the U.S. too.
Yeah,
EQT. Okay, well,
they're no joke. They're no joke. I didn't know that though. That's wild.
uh-huh.
So yeah, the
It's
50 for sure. Just definitely holding the line, and just for months now. It's just been ping pong in between that and the 60. So if this thing wants to fly, I mean, what would, for me, I look at this chart and I go, all right, long term, I want to be in this for a range expansion. So how would I frame this? Okay, so we have this previous range. We get the expansion 200%, bada bing, bada boom. What about this? What about this range? So we have this previous swing high and then the base of this cup. This is how I usually do it. And now I'm going to just drag it out here for us. We can see that what we've been doing is just ping ponging off rising support in the previous all-time high.
Yeah.
It's 1.27 fib. So Kev, this is where I always expect a range break to kind of stall. And this is like where the rubber hits the road. Are
Okay.
we really doing this? You know, is this for
Is
real?
that a little take profit area for you?
Yeah, it's for me. It's like I've noticed some people like the 1.22 ish kind of area. For me, the 1.27 is a real sweet spot for essentially it's like the midway point between the range break, so the 100% of a fib, and the
Mhm.
main first kind of extension target at the 1.62, that 62% extension. So it kind of represents the middle point in that, and it kind of just represents this area where if you think about what does it look, what is the anatomy of a false range break look like? It's going to overshoot, not just by 1 or 2 pennies, probably. It's going to really want to clear that out, right? Clear out all of the people who are trying to fade the move. And then after that, it can go back into the range or it can stabilize and go for that extension. And this is kind
Okay.
of the pivot for me. So yeah, I'm always looking at these 1.27 fibs. They're always on my extensions. And yeah, this one's looking really interesting, really compelling for a longer term trade. And I don't see that much when I'm looking at earnings in the past couple of weeks. Like not many things are looking at me like, wow, if they turn the corner, we could really see a nice clean move for a few months. So that's
Yeah.
one that's on the list for me. So I'm watching Toll and EQT pretty closely into this next couple minutes here as we get the results. I'll keep an eye on Twitter for those as well.
Yeah, so I'm curious, Steve, if you were to I asked somebody this recently too, if you were to break down, like, I don't believe I asked you this, like you're trading in a pie chart between technicals, fundamentals, and like trader psychology, essentially, it's your own personal psychology. How would you break that up?
Ooh, that's really tough. What are the categories? Technicals, fundamentals, and kind of personal psychology, did you say?
Right, yeah.
Okay. So for me, I kind of view technicals and psychology as a similar way. For me, the technicals are like the visual representation of the group psychology. So for me personally, I don't make so much of a distinction there. And I know that's kind of a me thing. So I would say my trading is about 20% to 25% fundamental. And by that I mean if I'm going to enter a swing, it needs to
Mm,
tick certain boxes. You know, if not if it's not profitable, it needs to have a very realistic path towards profitability. It's got to have improving metrics quarter over quarter. It's got to see accumulation of volume and interest, basically. So, most of those are fundamental, but the volume is what really matters to me because that's going to kind of confirm
yeah.
that all of those other things are lining up on the fundamental side. So I'd say 75% technicals, and I just need the bare minimum of like, hey, I'm not buying a dumpster, right? Like, because that's the first thing. I'll buy the dumpster for a day trade. I don't care. Dumpsters can go up and down,
So,
like,
a lot it's interesting because a lot yeah, so you lean a lot more technicals, but the thing is, a lot of traders would say psych of psychology is separate from technicals in that, like, what is Steve doing,
mhm.
like, when Steve takes a red trade, or what is Steve doing, like, if
Oh,
as far as, like, adding to losers or winners or breaking rules, like, you that's that psychology aspect of it.
100%. I mean, ideally, I'm like always playing my edge, and I'm able to kind of assess if I'm not playing the edge. But realistically, I find it's kind of like meditation. You're not gonna catch it the very second you mess up. The very second your mind wanders, you're not gonna immediately go, "Oh, I was distracted. Oh, time to lock in." It's about shortening the amount of time between these lapses of mindfulness, and that's the progress, I think. So I'm gonna mess up, but the thing is, nowadays when I mess up, I catch that maybe my 0 DT is down 20% instead of letting it go to 0 a year ago, or maybe I'm not reticent to stop out on that first like sign that something is wrong, and I need to wait for that quote unquote confirmation, but in my gut I knew that it wasn't what I was anymore, that kind of thing. So that's the kind of distance that I'm trying to shorten. And so when I'm doing well, I'd say that's definitely a guiding tenet, but I will not claim to be perfect. So I'm going to check for these earnings results now, as we did hit the flip here. Nothing showing for EQT on Earnings Whispers yet, or Toll. I'm going to check the Twitter as well. They're usually a little quicker. And not seeing any movement on Toll either, just a widespread there. EQT widespread, no ticks yet. Okay, it looks like we did get, grain of salt, very first out of the Twitter gate here on latest, but double beat, earnings per share beat by 3.3% on Toll Brothers, actual 2.19, expected 2.12. That's a 25% year-over-year increase. On the revenue side, that's a 16% beat. Actual is 2.15 billion, expected is 1.85 billion, and that is a 15% year-over-year increase. So not a bad look for Toll. And for these guys, I believe that these are considered more on the luxury end of the home building. So this is going to test the resilience of their kind of luxury affluent buyer strategy. And it's definitely choppy in terms of the housing market overall. So this will be a good gauge, I think, of how the kind of the luxury, or at least the more higher end sector, is going to be
curious how the luxury home buildings. I was looking at some of their houses. They're about to expand in certain areas like certain areas of Texas and California. But then we just saw reports too, where, of course, housing affordability is apparently the worst it's ever been, Steve.
Yep. So you don't gotta tell me twice. I'm feeling it.
Yeah. Because you're San Francisco, right?
Yeah, I'm San Francisco, but I'm renting from family right now. I'm not a big baller like that. So,
but your area, I'm sure, is that's up there.
It was interesting. I was talking to my pops last week about housing markets, and I think last week properties in the Hamptons were breaking all-time highs. So if you've got money, the highly sought after areas, they're still holding up just fine, it seems. It's going to be interesting. It's going to be interesting how this kind of plays out, because, man, I mean, it's not getting any easier. It's not getting any easier, and I'm very concerned about the prospects of the labor market overall, with in the transitional period where AI is just eaten up.
And that's, Ricky, that's exactly what was happening, I believe, with Palo, is what Steve just pretty much alluded to. It's the AI and software and cybersecurity has been taking a hit, and that's probably why we're seeing no volume on TOL even after beating. Like I think investors are like, yeah, I ain't buying it. I'm not. Really, but like that's a play on words, but they're probably like, I ain't buying this. Not at all.
I think, again, we're talking about expectations, right? Because this one was ripping. It was ripping. It's at all-time highs. So if something's going to break all-time highs, we need to have a reason to price it higher than it was before, right? So we could be in a situation where, we double beat, looking good, but is it good enough to break that kind of psychological line in the sand, where it's like, things were obviously, prospects were looking good when it was trading at this level, 6 months ago, something like that. So is it good enough? Is it good enough, or is this the start of a massive double top? I don't know. I'm not going to get too doomer, but just worth noting. So I think we're just waiting for the volume to come in tomorrow. Not a bad idea, or on guide. So we are seeing the first fill after that print was down at 161. This is a low liquidity guy, so definitely not high liquidity day trader like you can do on the mega caps. But man, I guess we'll see. Widespread, so I don't want to read too much into it. This is a whole whopping 500 shares traded here, so we shall see.
That's all the volume, huh? 500 shares. Now, yeah, on the swing accounts, you don't have to worry about that so much, right? It's just the day trading ones, 5% rule.
Yeah, absolutely. And okay, we do have 16 seconds ago got EQT numbers. It looks like they missed on revenue, putting in 2.1 billion. Estimate was 2.16 billion. Small miss on revenue. Earnings per share came in at 0.90. Estimate was 0.76. So strong beat there. Reported strong earnings per share, but slight revenue miss versus expectations. So again, we're playing with the expectations game. We gotta see if it's ready to push, to make these big pushes. Often you can see this kind of get digested for maybe a couple weeks or so, and then you can see the after earnings push once we've kind of like ticked our boxes, maybe more names in the sector report and kind of build confluence in the bear or bulls thesis, something like that. So I think just giving it a little room to shake out isn't a bad idea whenever you're playing with a binary print into all-time highs like that. Like it's got to settle sometimes. And I always just think about how brutal SPY can be to trade as it's trying to break through previous all-time highs. And very often it needs to chop multiple times back down into previous all-time highs, back up like it's going to just squeeze, back down like it's going to crunch, and just
Speak
that
about
digestion.
SPY. Speak about the choppiness you have today, even on the SPY, just up and down.
Day traders are great, though. Man, we got some moves. This was really fun. Did you take any of these on the indices or anything kind of high beta, or were you sticking in your small cap corner?
Sticking in the trash is where I was. But some of you in chat were mentioning some of those names like Rhyme, which I was hoping never to hear of again because that was such a clean setup, RIME, but it didn't fit my criteria entirely, Steve, because it had a 20% short interest, and I was just like, I got to avoid with that high of a short interest. But it ended up being beautiful.
That's a heck of a chart there in retrospect. But yeah, I can see what you're saying. So what's your kind of line in the sand for short interest?
That right there at 20. It's like the 20 right there at 20 is where I've gotten burned, like short and some of that is that's just where it starts getting sketch. Right around 20, you can see irrational moves, like just run rampant.
It's funny where you say it gets sketch because I've gotten burnt in both directions on those 20% short interest names. Sometimes it's like, oh well, I guess it wasn't. I guess they hammer it back in the casket, right? But so 20%, that's your line there. I like that. I'm just accumulating information here. So for Rhyme, this besides that, did it kind of tick most of the boxes for this hangover setup of yours?
Yeah. Checked the boxes, hit the magic 20, always going over that 620 fast. The faster the move, the weaker it is. It was heavy against the descending triangle form off of that 620, like the 5 level. So even like I could have just risked the 5 and played it, but it would have been smaller share size. If I feel like it's not pocket aces, I'm gonna treat it maybe like pocket something 10s, 5s.
Fine, I'll play it. I want to play a hand. I want some action, but not gonna
exactly. But I'm not taking all my chips like, oh, this is all in on this play. But yeah, that was one of the better ones. Just watched it happen. Fairly disciplined about not chasing setups. But
well, that's the thing. Here, right? There's always going to be another fish, and you don't go hungry by missing any one fish. You know how to fish. You're gonna catch the next one.
Well, that was part of the psychology in reference to the pie chart I was asking about, because there are traders who will Toll.
Yeah, sorry, just got a little giddy up here. Just still very widespread. We're trading within the day's range, but this is looking a lot better now. So we're going to keep an eye on that one there. And
gotcha.
I'm kind of bullish. If I like when, so we have the first kind of little move down after a beat. So it's like, okay, expectations were high. We're going to see a little bit of profit taking, but then maybe we got new people in the market like, hey, this looks pretty good. This is an all-time highs. I think it's going higher. So that kind of shift of market participants from maybe the day traders or the gamblers who are like, all right, I got a little win. That's enough for me, into like, hey, I was waiting for good numbers and I think this ticks my boxes, just like I'm looking to tick boxes to get into a swing, maybe this is ticking somebody else's box. So we gotta keep an eye on that for sure. I'm liking this cooking. I want to see a breach of that 167.14, which was the high of the day there.
Just make sure you have a box, traders listening.
Yeah.
Yeah, just have a box to check. Not, oh, it's just moving, Steve. That's just moving. Speaking of fish, you were talking earlier. We do have tuna in the house and
Tuna
tack as well. So like, Tuna called the call-in show one time, and we were discussing earnings. The question actually, Steve, was on. It was like the start of when we started doing the earnings videos, and I was asking like, how do you guys that trade these earnings trade them? And they approach it not day of, essentially like a week or two ahead of time.
Yeah.
They're writing, how the quote goes, buy the rumor, sell the news. They're essentially doing just that, like in anticipation. But then when the news comes out, that's when they're unloading their share. So that's a very, interesting approach. I'm curious if there is, or if there are traders in chat who are trading these earnings live, where you actually have an edge live on some of this, on some of these news releases as we're covering them. I'd be curious.
I think you have to have conviction, right? You have to, it's a type of trader that can buy critical levels on knife catches.
Yeah.
I am that type of trader if I trade incredibly small. So I do have some fun snipes that I like to do where I'll just put in some resting orders that might get tagged on some big wicks. But this is always funny money. Like, hey, maybe I can make 20, 50 bucks. Maybe I'll lose 20, 50 bucks kind of thing. I'm never betting the farm, never shoving the whole pile in the pot there for these. But I'm with Tuna. I'm with Talk on that. I like playing the run up. If it's a name I'm interested in that I think has buzz around the earnings, I'm buying before I think that kind of gets moving. And often you'll get a key buy like a week or two before off of a good moving average, good horizontal level, something that you can kind of stick your heels in the dirt and define risk into. And then, okay, you've defined risk. Hopefully it's working in your favor. Maybe it's chopping. Either way, as you approach that earnings, this is one of the rare situations where I specifically do look to play options because I'm looking for that IV ramp. I want everybody else in the market to go, well, I think that contract's actually worth a little bit more because I'm personally pricing in a bigger move. I'm speculating. So I want to capture that speculation kind of inflation, the speculation tax. And then I'll sell most of them into the earnings. And then I'll hold one runner if I actually do believe in the direction. And half the time, I'd say probably 60% of the time, I give that money straight back that I made, with the free roll contract that goes to zero. The 40%, it's fun. But I think the real systemic money to be made is in that run up personally, or accumulating a starter in a really long-term position off a knife catch. But that's very different ball game, right? Probably not a trading.
Yeah. Well, I like that approach. You're scaling the knife versus I've seen traders try to fully just throw their hand out and catch the knife. And I like the slow scale approach to it. You have the risk in mind, but it's challenging to time like the exact bottom, right? So it's
100%. And it's so okay if you love the name and you just want to be involved and you actually are an investor. And if it goes lower, you'd be like, well, I want more. If that's your mindset, take a nibble, but just keep cash for the right side of the V. Kev, have we talked about the right side of the V concept?
Oh, wow. There was speaking of the right side of the V, what ticker was it just a little bit ago that, the daily chart looked like that. It might've been Toll.
Yeah, quite possibly. Let's
no, hang on.
But just the general concept that I'm sure you're familiar with is just you can define your risk so much better by buying the exact same price, just waiting for it to come down through that level and reconfirm, right? So that right side of the V, as opposed to when it's just pile driving down into the dirt. And so it's the same level, right?
ATOM. Look at ATOM today. It did that V. It was like ATOM in the small caps. Let me know if this is the V kind of like you're discussing earlier, like the V.
Let's see.
If you zoom out from the end of the day.
Intraday. Well, real quick, just before we bounce in here, just for the bigger concept, imagine saying, I want this name and just gap down 50%. I'm going to buy right here. Imagine if you wait, instead of buying right there, you buy on the right side of the V.
Yeah.
Obviously, you could get jammed. You could get jammed right there. So maybe not the perfect example. This is a better example. So a real base is forming. So you're like, this is too much. Okay, you were right. This was the low, but you can wait until this base is, and then buy it on the break through the base right there, and then you're in the clear. You're trading the easy move as well, hopefully, as opposed to this brutal chop. But you said intraday was a nice example.
Yeah,
So.
one's predictionary and one's reactionary.
Exactly. And
I don't do well with like the predictions. They're fun, like a little ego boost, pat on the back. But if you want, but I want to make money, right? It's like, do you want to
yeah,
have rub your crystal ball or do you want to make money? It's so
exactly. And Kev, it's so important to recognize that it's human to wanna let it run, to want to put it all on black. It's okay to have those feelings. It's not okay to give in to them. You know what I do when I feel like that? I stop trading and I go play video games and I get my dopamine from something else,
Yeah, because you have to define it. It's like it's like how everybody treats just gambling too or going to the casino. It's like they just you take $1,000 and you're like, I'm going in there and you have no profit in mind. But if you do go in and you're like, look, I'm just looking to make a couple hundred, double up, and it's like you hit that and you clear it. But it's same thing in trading. I'm sure you've heard of the scarcity loop. You can the dopamine, like you're referencing. Trading can be that. The scarcity loop is what? It's just having it's essentially spinning the wheel. It's saying, I don't know, this is going to be random results every time I take a trade, random results. And you have quick repeatability and opportunity, which is everything. It's social media, it's spinning the wheel. You have all three of those criteria where you'll have an opportunity for something, you have random results, and it's quickly repeatable. Those three things. And so you can treat trading like that. Today was so aggravating because it's like I only took 3 trades. I took 3, and for some that may be a lot. For me, it's not that much, but it's like you're sitting here like a sniper, waiting for essentially your prey to walk in front of you. If you're like a lion just sitting there in the Serengeti waiting for the gazelle to walk by, you have got to just let it come to you versus letting what you're saying, the dopamine takes over and you're like, I'm a trader. If more trades equals more money, so let me jump into something. When then in reality, like more trades does not equate to more money. It's your trade that equates to more money. It's the amateurs need a trade, the pros need the trade. So you're waiting for the trade to present itself to you.
I love it, man. I'm straight into my veins, brother. This is that good stuff. Because it's so easy to forget about all the money you lose in chop, waiting for just like you have the opportunity cost, of course, but just like the mental capital that you're burning by not just taking the straight move and then waiting for that fat pitch. So that's something I'm definitely focusing on this year in my trading. Just really asking myself, do I need to be in this market right now? Is it going to is it going to pay dividends to have the clarity of mind of not being torn in 6 different directions by these 6 different positions, and maybe just really focusing on that really high probability setup when it occurs?
I think that's healthy to before you ever enter a trade, say, almost nearly talk yourself out of it. Like don't have the analysis by paralysis and turn into like an analyst per se, where you're never taking trades, but you have to almost convince yourself of reasons why this trade isn't going to work out. Right.
Yes. I love that. Because you always want to be steel manning your own thesis, right? You want to be really cooking that thing and honing it and making sure it survives the stress tests. Because if it doesn't, then you're going to find out that it's broken when it's cooking you, and that's no fun. Because then you have to make the gut check call when you're feeling the worst, Real quick, we are having just a slight bit of upward movement here on EQT. We've got the spread popping over that 58.50 handle. I'm going to zoom out to show. I think that's over the previous day's high. Okay, not quite. So this 59 is going to be our pivot that we're looking for a breach to really get cooking. And then there will still probably be some sellers at the 60 if we get there. But I'm thinking this is like you said, the faster the move, the less real it may be. I like these constructive moves that, they take their time to build out constructively. Meanwhile, not so constructive is PANW there, just looking like another 1-minute bear flag starting to play out, dripping on down. So no touching for me. It's the Arrested Development. No touching. Can't do it.
Yeah, that's absolutely the truth. I mean, just That's what I look for on the reactionary side is fast moves. Because like we saw with QMCO, that was led by a quick move towards some resistance. You can, similarly to how you would scale on the long side, you could scale on the short side on those names that are fast. A lot of traders I know do that. Of course, have to have risk in mind, and because they can get out of hand. QMMMs, TCL, GL. So we have two really good references to like how martingaling forever does not work. I mean, it will work. I know traders with great 90% success rates, but there were two recent examples in the last couple of months where all your yearly progress would have been blown.
And Kev, let me steel man your point here even more. The biggest example in my book of the martingale failure was the one that occurred into Christmas. So into Christmas, we had a violent move from what looked like a puke down at 670. We violently pushed up to 690 within 1, 2, 3, 4 trading sessions, and 1, 2, 3, 4, 5, 6 days in a row. Captain Condor. This yeah. Are you familiar with the Captain Condor saga?
You'll have to, chime in.
Yeah, for those who may not be familiar, Captain Condor is quite a wacky character on FinTwit. His thing is he martingales what is it? Iron condors. So essentially, he's betting every single day intraday that SPY will not move above a certain level or below a certain level. So he's betting on ranges holding based on historical norms.
He'll do
you know what? If you keep scaling that strategy, eventually you put a target on your back. So even on the most liquid instrument in the world, market makers found a time in the holiday run to low liquidity just run this up. It was like at least a 3 sigma move. I mean, he modeled this out as I don't know, a 1 in like 3,000 chance. Well, lo and behold, the market has a funny way of coming and cooking you. So I think he survived because he was able to average down once, twice, 3, 4, 5, 6 times. He doubled down.
Well, he may have some success with the new kind of prediction markets coming out to Robinhood or so. Maybe he should do that. Stick with something like that. Yeah. Rather than martingaling, if you can like parlay a bet, hey, SPY's not going to be above or below this by when? End of the year, and then parlay like that. So you don't martingaling. Whew, that's it, Tack. You got it. Yes, that's the term. Got to be careful with it. You got to be careful with it.
The thing is, he may have survived 6 double downs. His Substack did not. So many retail traders got destroyed. And I'll be honest, it left a real bad taste in my mouth. Market makers hunting primarily retail over the holidays like that, with this martingale strategy. But at the end of the day, it's I always think of the world is a beautiful place, but it is also a scary place that is not thinking about you first and foremost. So you can't fade these these big tail risks and just expect it to work out.
No, there's not thinking about you really at all. I mean, we saw a GoFundMe guy with TCGL, sadly, and did you see that too?
I did.
Just brutal.
Nobody wants to see it,
And honestly, look, martingaling the market's one thing. That wasn't even entirely his fault. The ticker just had opened up 50 points higher, but people like to. I actually do feel for.
I do. Yeah.
I really did feel for that guy. I do, because. And of course, that's why we like trade the pull, because you end up in a situation like that. It's not life altering, where a trade like that can happen on a short position that quickly. But
it's so true. And Kev, we always think it can't happen to us. Well, a certain somebody we both know who's quite a trader and quite a successful man, Michael Katz, the CEO. He has quite a story about losing 90,000 in one day. And that's kind of why we're here, kind of why he built this. So that's a good story. You can find that on the Trade the Pool YouTube channel. If you're feeling bad about your losses, well, you know what? My boss lost a whole lot more than I'm going to make this year all in one day. So It's all about keeping in perspective. And remember, it's a marathon, not a race, guys. You gotta
Yeah, I talked to him about that, and the thing is that we got to trade a size where we can think with clarity of mind. Of course, Katz is a great trader. He had, from what he has told me, that's been encouraged by his mentor to, hey, you're trading really well. Let's size up a little bit. And so it's it can, when you're trading outside of a size that you're comfortable with, we're not going to, there's probably going to be lapses of judgment, right? For everybody. Like if you're trading really large, size, what's going to creep in? Bias is going to creep in, and then we're not going to think with clarity. We're going to have a lapse of judgment, and mistakes can be made. Some of the best traders that happens to, it's like you can be such a good trader, but then when you're outside of your comfort size, you're less thinking about trading well and money being a byproduct of just trading well, and more thinking about this trade needs to work, in which case it likely won't. Yeah. If you ever find yourself in that prayer stance, not good for trading. I mean, yeah, pray, but for trading, not good for trading.
I like proactive prayer,
Yeah, exactly.
I don't like, please Lord, I swear I won't do it again prayers.
Oh man. Painful.
But I've been there too. But that's you got to treat it as a wake up call, because for me that was a sign that, hey, I thought I was a rational actor. Meanwhile, clearly I lost the plot at some way or another, because you get that risk of ruin too. If you size up and a trade's going against you, you start thinking like in fatalistic terms. Like it's like, well, this has to work. Well, if this doesn't work, I can't stomach the loss. If you're at that point, I strongly recommend, you're probably in the bargaining phase. It's probably not done, the pain. Probably at the very least, please size down when it's not working.
Yeah.
No shame in taking some of a position off when it stops doing what you think. And then if it keeps not doing what you think, you got to keep sizing down, but you can't do the opposite. The opposite is martingaling, and it's so hard because most of the time it works. Most of the time it's going to work. But you're just setting a landmine in your near future. It's like the tail risk. It's like 1 to 3 years where this event horizon will blow you up. And the more you martingale up to that, the more money you have to risk to lose at that point. The market loves clawing it all back. So be careful, guys.
Yeah, I have so many stories, Mr. Steve, but we don't have time for it. Maybe one of these Friday night live streams, we'll get you on there and have some story time with us on.
I would love that. Yeah, I just was made aware last week I couldn't make it, but this week I'm gonna show up, and at the very least hang out.
Oh, really? Yeah, Josh is starting this Friday. Hey, that'd be awesome.
Totally. I mean, it's a blast. And, us traders, we're a weird lot, like it's good to hang out with civilians. It's also good to have some downtime with the boys and the girls, of course. But, with the sick trading freaks who love doing this stuff to ourselves, torturing ourselves. Yeah. So we can commiserate on the
yeah, exactly.
All right, guys, thank you so much for tuning in. We had some interesting moves, a lot of kind of little spatterings around this different sectors. We had some home builders, we had some software as a service, some energy as well, especially that nat gas kind of putting in some work here today. So that's one sector I'm looking at going into tomorrow, see if it can carry through. I'm going to be watching that CDNS into 300, see if my boy Exotic Seal gets to cash out on his long-term position above there. So sending good vibes that way, not touching PANW, and that's about my summary for us. Any closing words here, Kev?
Yeah, per usual, traders. You gotta A, have the edge, right? Then B, you gotta have the discipline to just trade that. Like Steve and I were saying, just don't let the dopamine take over. Yeah. C, you have to have the consistency to just do that day in and day out for it to compound over time. That's how it's going to compound. But random trading equals random results. So learn what is your system, your edge, stick to it, know it intimately. Really know yourself intimately. That may sound weird, but know yourself very intimately. And that's what trading is. It's a mirror. It's a mirror into really yourself and understanding. That's personally why I love it so much. You get to see your strengths, your weaknesses, and you can't avoid them, Steve. You can't avoid it. It's the beauty of it. We can perfect ourselves. And I've heard even quotes people say, "You master yourself, you master the market and you master much of life. So you master yourself, you'll master the market. But this has been fun per usual. Appreciate you, Steve. Traders, love you guys. If you need any help anytime, always reach out to us. We're happy to help you guys.
Absolutely, man. Kev, I could talk another hour just about that. We'll have to do a full psychology stream. But thank you so much for joining. Thank you, everybody else. We're going to wrap it up here, but tune in tomorrow. You know where to find us first thing in the morning. You'll have me, Money Mitch, and Michael Noss out of the gates, and then all of our beautiful programming on throughout the day. You know where to find us on Trade the Pool. Check us out on YouTube. Check us out on Twitter. Check us out on Discord. We are everywhere, and we are coming for you because we want everybody to win. So take care. 2026, the year of Trade the Pool. Have a good one, guys. Peace.
Later.